So there's plenty of major data ahead this week, so we better get straight into it. So hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday, the 12th of September, 2023. And before I do get into it, you do need to be aware that anything I say is general advice only. It doesn't consider your personal financial circumstances, and you have to decide if it's appropriate for you. Inflation. It's been dominating markets for the last 12 months, even 24 months. It's been dominating my videos, and it dominates again this week. We are going to see the release of US CPI data tomorrow night, and that'll be their CPI growth for August. CPI is taken as an analog for inflation. It's pretty much the only good measure we have for how much consumer prices are increasing over any given period. So this will be CPI for August, and it is expected to lift from July's number. Now, a lot of that lift is down to oil prices rising and the flow-on effects of oil prices rising into other prices. When you consider, agriculture, mining, transport, a lot of industries, in fact, almost every industry uses oil, and as oil prices rise, so too do the other industries have to lift their prices. So with CPI growth expected to increase, many investors may start to scratch their heads and wonder whether we're out of the woods when it comes to interest rate rises. And if this CPI growth number is large, I think we will see markets start to price in more rate rises. Now, core CPI growth is actually expected to hold fairly flat from July. This is probably where the main market response will come from, whether that core CPI number increases or decreases. Now, this is going to be a pretty big CPI reading. We will expect to see large market movements on the back of it, but immediately after that, there are going to be some other big data points as well. So on Thursday, we're going to get Australian unemployment. That's also going to be very important for our own inflation and interest rate story. And then on Thursday night, we're going to see US retail sales, and we're going to see US producer prices. Those are also very big reads when it comes to the inflation and interest rate story. The market really wants to see CPI growth slowing. They also want to see unemployment start to tick up a bit. They want to see retail sales down. Overall, they actually want to see the economy slowing. They want to see things slowing down, price growth slowing down, and they do want to see the economy start to weaken a bit. Because in the market's mind, that means that we may already be at peak interest rates. If that data's all hot, if it shows really strong growth, if it shows a really hot economy, then we are probably going to see some more rate rises in the coming months, and that's not what the market wants. The other big story is the Chinese economy. So recent Chinese economic data has been really weak, and that's been very negative for Australian miners, Australian materials stocks, and just general sentiment on the market in general. There was a couple of positive data points over the weekend though, and that included Chinese inflation data actually coming in a little stronger than expected. So unlike the Western world, they actually want to see a slight tick up in Chinese inflation. And then we also saw Chinese new bank lending quadruple in August compared to July, and that was ahead of expectations, and that was also signs of stability in the Chinese economy. Finally, today, there was also news that Country Garden, China's largest property developer, was able to reschedule their debt payments, pushing them out 3 years. Now, Country Garden had been teetering on the brink, part of wider issues in the Chinese property development space, and them pushing out their debt payments, shows that creditors have some confidence in the economy. It shows that there's still life rafts available for some of these large under pressure Chinese businesses. So some signs of life over the last couple of sessions for China, and that has fed into my last slide, and that is iron ore. Iron ore's actually held up really, really well, and that's despite all this negativity around China, all this negativity around their property space. Iron ore's actually kept pushing sideways to higher. Now, our iron ore stocks have fared fairly poorly over the past month or so. We've seen fairly large sell downs. We saw BHP go ex-dividend and fall almost twice as much as the dividend, and that's despite the iron ore prices holding up a bit. So with the news over the weekend, over the last couple of sessions, and with iron ore holding up really well, we've actually seen those miners start to tick back up a bit. And I do just want to quickly touch on the chart of iron ore, this one taken from the Dalian Iron Ore Commodities Exchange, or Iron Ore Futures Market. And in China, a red bar actually means a rise in prices. And we can see that it's basically trading at multi-month highs. That's despite all that Chinese negativity. So you'd assume that with iron ore holding up this well, those iron ore stocks would be performing well as well. Well, in a moment, we're about to see that wasn't necessarily the case. So iron ore's holding up near its highs, but if we have a look at Rio and BHP, our two largest iron ore stocks, they've actually not performed that well over the past week or so, but over the last couple of sessions, Monday and Tuesday, as that Chinese data stabilized, we've seen them push up a bit. So this is Rio. It held a key support level at 110 per share, and it's jumped back towards 114. And if we have a look at BHP, we can see that it held support. That was after going ex-dividend there. Held support at $43, and it's pushed back up towards 44.50. So a bit of signs of life in the iron ore market, and that was after a bit of stability in Chinese data. Looking at the technicals for the Australian market, and we have held the longer-term uptrend. So this uptrend formed since October last year. We've got about 4 touch points now, and we've held it over the past 2 sessions, Monday and again today. There is a bit of a level around 7,200, and we managed to sort of creep our head above that level today. The last time we did that was back right at the end of August, and after that we pushed straight back up towards 7,300 before where we stalled out a bit. So the real test for our market will come with the US data releases and our own data releases over the next 2 days. But technically it does look like we want to grind back up towards that 7,300 level. We've got the stochastic crossing over to point higher. We're climbing through 7,200, and technically to me this does look further bullish back towards 7,300. Like I said though, that data could definitely throw a spanner in the works here. Looking at the US market, this is the S&P 500. Their largest index has all their largest stocks, and it's their most broad-based index. They've also been on a bit of an uptrend, although they're in a much sort of sharper uptrend in the short term. They've sort of bottomed out a bit in August, but they've set higher troughs since then, and now they'll be looking to set a higher peak. So they held at 44.50, and they've shown a bit of a bullish signal overnight. To me, that says they want to rise towards 45.25 here. Not too far away now, and like I said, there will be plenty of important data releases over the next 2 sessions that could throw a bit of a spanner in the works to those technical bullish indications. Alright guys, that's it for this week. I hope you guys enjoyed. Next week, undoubtedly, you'll hear me talk about how the US CPI came out, how Australian unemployment came out, how the retail sales came out. But, you know, until then, we're only guessing. So at the moment, technicals are bullish. Hopefully that means that we will see those gains in the coming sessions. If you guys enjoyed the video, make sure you click the subscribe button, make sure you drop us a like, and I'll see you in the next one.